Okay, good day everyone. It's Total Investor here, everyone's favorite YouTube investment and trading channel. This is the channel where we discuss trading and investing opportunities, usually being commodities, crypto, or primarily stocks. And today, I believe I found one excellent opportunity where if you have the money and possibly the risk that you're willing to accept, there is the possibility to make 10x, maybe 20x your money, depending on how you play it. Okay, and that is in the natural gas sector. Okay, I just came across something today that I read, and I'm going to show it to you right now. This is the chart. Let me get out this. It's just talking about natural gas inventory. Okay. Now, if we look up here, this is basically Bloomberg coming up with the numbers. Let's start reading from here. Okay. Bloomberg's Monday U.S. gas monthly, which they tweeted, and came to big potential upside for 2022 next year, and even the year after that, 2023, for forward strips for Henry Hub. That's 340 for 2022 and 290 for 2023. This is the Alberta price. We're going to ignore that. We're just going to be trading or looking at trading of the one that trades in New York. Bloomberg, they forecast U.S. gas storage for October of 2021. That's this. Just in a few months, it'll be 3.497 trillion cubic feet, which will be 140 billion cubic feet lower from last year. And that's a little bit on the conservative side, and it says it's currently 532 billion cubic feet lower, with expectations for strong U.S. liquefied natural gas exports in the summer fall. But the real thing, this is what I really want you to pay attention to. But then Bloomberg had a shock forecast for October 31st, 2022. Okay, so this is next year, for U.S. gas storage to be 2.64 trillion cubic feet. This is a hugely bullish storage number. Basically, at least 1 trillion cubic feet less than normal. And the last time that these numbers for October 31st storage was under 3 trillion cubic feet, that was back in October of 2000. Okay, so we're going back 21 years. The last time when Henry Hub went to over $10 during the winter of 2000-2001. Okay, I had to go back to some charts that I had, and it hit $10.50 in December of 2000. Okay, now I think it started off at around $2.50, $3, something like that back then, and it just rocketed right up. Okay, huge move. Now it continues. Even if storage is 3 trillion cubic feet, it's hugely bullish for Henry Hub and AECO gas prices. Okay, it continues on. You can read that, but that is primarily what I wanted to highlight, the potential. Okay, now let's look at the chart. Please keep in mind, I got to give you the disclaimer, of course. What I tell you today is for educational purposes. It is not investment advice. I'm not your investment advisor. Okay, this is commodity trading using futures. You can make a lot of money, and you can lose a lot of money very quickly with futures contract. And trading, those who have traded natural gas in the past, they call natural gas the widowmaker. Why? There's a good reason for it. Okay, you can lose a lot of money real fast. So you got to know what you're doing, and hopefully a little bit of luck. Okay, or maybe even a lot of luck. One contract represents 10,000, so it's a 10,000 multiplier. Okay, so what I mean by that, if the price, let's say you were long one contract of natural gas at the current price of say $4, and it moves to $5, that $1 is actually $10,000 in profit. Okay? Of course, conversely, if it drops down to 3 and you were long, well, that's a loss of $10,000. The margin, depending on what company you're using, we're going to say about $2,000, maybe $2,500. Okay? So it only takes 25-cent move to double your margin. Okay? Lots of leverage. And of course, leverage is a double-edged sword. Okay? Now, I'm thinking, how do I get into this and trade this? Not for a day, a week, a month, because, again, we're going to be going out to the fall of next year, 2022. Okay, so that means I'm not going to be buying that contract. I'm just going to be rolling out because there's more liquidity in the front months. Okay, so when these months expire, I'm just going to be rolling out to the next month that offers me more liquidity. Okay, the question is, when do you get in? Because, as I said, a small pullback of 10, 20, 30 cents is a big hit. Okay, well, one way to do that is by looking at the 9-day simple moving average and the 18-day simple moving average. Okay, and just playing the crossovers. That has seemed to get you out of and keep you out of trouble for most of it. It's not perfect. There is no indicator that is perfect. Never has been, never will be. But it helps to put the odds a little bit in your favor. Okay. The last time to get in would have been about here, 270, 275 when they crossed. It's been pretty much bullish ever since. Both moving average are sloping upwards. Okay. Another time when you could have gotten in is, when it hits or touches the 18-day moving average. Here would have been another good time, and also up here. Okay. Now, as it stands right now, the last time would have been around like 360, but it's now 40 cents higher. That represents $4,000 per contract. It's a lot of money, considering, again, the margin was about $2,000 to $2,500. Okay, so 200% profit over your margin for just a couple of trading days, that's not bad. But do you really want to get in now? Well, if you're only thinking like a long term, like a year and a half out, and it goes to $6 or $10, that would be, from $4 to $10, $6 profit. But again, multiply that by 10,000. That would be $60,000 profit if it hits $10. Okay? A lot of money. But you also have to take into consideration, what if it pulls back, and how far? So if you're holding that one contract, and let's say you're getting in now, how much pain can you take in the meantime? If it drops down to 390, okay, that's $1,000 loss. 380, 20 cents. That's $2,000. At what point do you give up and scream uncle? Okay, so you have to keep that into consideration. And what I would do, and this is me, again, not financial advice, I would be looking for a pullback to the 18-day moving average and then go from there. Okay, I think that I would want to, I certainly don't mind waiting a year and a half for a trade, it's usually a lot longer than what I wait for on a futures contract. My positions usually last a couple of weeks, usually. Of course, it varies from one trade to the other, but here's one that is much, much longer. It's further out there. Okay. Why would I wait? Simply because of the profit potential. Again, a possible $60,000 if everything works out. Again, we don't know because something that's just the the inventories. Well, it could be something that happens with supply or demand. We don't know. I can't forecast what the weather's going to be in a couple of months, let alone next year. So anything can happen. But that turning $2,000 into $60,000, I'm interested. Okay, so I'm going to watch this very closely to try to get in at the appropriate time, and we'll monitor. I'll monitor it day to day. So this is something that again I present to you, not as something that you should take. Again, I don't know your financial situation. I'm not your financial advisor, but maybe just keep it on your watch list and go from there. I personally would not be buying the stock UNG because, again, the potential is really going out a year and a half, and that is something that has time decay. Okay, so I've purchased them in the past, I bought them in the past. I went long, and even though I was right on the underlying commodity, they didn't move fast enough, and the price of the stock or the financial instrument really didn't do quite as well. Why? Because of time decay. So that's why I'm going to avoid UNG. You could also trade gas stocks, although they're harder to find and they have like another element involved, like maybe they have too much debt, they've got other things going on. It's not always a pure natural gas play. This is the purest way to play natural gas. Okay, so again, something to think about and put on your watch list. Okay, if you have any questions down below in the comment section, I'd love to hear from you. Please, big thumbs up. And if you haven't done so, and I know the majority of people who watch this have not subscribed, down below, big red button that says subscribe, hit it. If you are subscribed, YouTube will notify you when there is a new video. And I try to bring you very good opportunities. Okay, so if you want opportunities, hit the subscribe button. Okay, and with that, I will see you in the next video.